Hello, it's a very lovely good evening once again, and a great welcome to each one of you, and hope that each one of you are absolutely fine, in fine spirits. So, after having finished till up to 1.3 in the last session, now we are going to just continue our journey and going to pick up question number 1.4. So, question number 1.4, we straight away come to the business end and start today's this particular session. Now you are having the notes too. Just have a look over question number 1.4. So in this particular question, you have been given Jet Limited acquired 60% interest in P Limited on 1st of January 2023. So we got 60% stakes and we paid 700 lakhs in cash for their interest in P Limited. The fair value of P Limited's assets fair value is given separately 1,800 lakhs and fair value of liability is 900 lakhs. Provide the journal entry for the acquisition using Ind AS, assuming that P Limited does not wish to report the NCI at fair value. Now in this question it is given to you that this company is not interested in reflecting the NCI at fair value. Indirectly, it means they are interested in computing the NCI on proportionate method basis. Correct? So this is the question, and I will, as usual, first analyze the question for the better understanding of yours, and I would love you to actually develop this habit. Correct? Somewhere in the rough, prepare a chart like this, so that it becomes easier for you to solve the question. In this case, there is Jet Limited. It is given that on 1/1/2023, they acquired 60% stakes. We presume that accounting year must have started on 1/4/2022 and must have ended at 31st of 3/2023, because generally companies have financial years as their accounting year. They acquired 60% stakes in P Limited. On the date of control, 60% stakes were acquired, as you can see. However, it is given that this company offered purchase consideration. That is, consideration is payable or paid in cash, that is equal to 700 lakhs. It is given. We paid 700 lakhs to acquire 60% share capital of P Limited. Further, it is given to us that on the date of acquisition, P Limited's assets were having a fair value. Assets were having a fair value of 1,800, while liabilities were having a fair value of 900 lakhs. 900 lakhs. Is it clear to you or not? So this is the situation. Now, in this question, it is very clearly given that they are not interested in computing the NCI. They are not interested in computing the NCI at fair value. Indirectly, it means they are going to compute the NCI on the basis of what? On the basis of in proportion to net assets. So first of all, I am going to write 100% of fair value of NIFA of acquiring company P Limited on the date of control. So on the date of control, the acquiring company were having assets and fair value is 1,800 and liability is 900. Now, it means on the date of acquisition, their total net assets or net identifiable assets were worth rupees 900 lakhs. Correct? Worth rupees 900 lakhs. Now, out of these assets, NCI is going to have some share in it. When I write here NCI, it means the proportion of the non-controlling interest holder in the assets, in the net assets on the date of control. And NCI we are computing on the basis of, on the proportionate method basis. Proportionate basis. Our stakes are 60%, so stakes of NCI must be 40%, and proportion of NCI out of these assets must be equal to 360. And if I subtract 360 out of 900, I will be left up with 540. I will be left up with 540, correct? I will be left up with 540. And then what I am going to do, I am going to write here share of Z Limited, that is acquiring entity, share of Z Limited in fair value of NIFA, of course, of acquiring company. So on the date of acquisition, we got control of this much of assets also, we can say. And for the same, now we are offering how much consideration? The consideration which we are offering it's given to you as 700 lakhs. Since the amount of consideration exceeds the amount of what we call net assets which we are deriving, so we may say in this case that the difference will be equal to goodwill. I need not require to tell you. Correct? And what will be my entry if I am going to ask you in this case? My entry will be, when you write the entry, it is always better to write the assets separately, because in this question assets and liabilities have been given separately. So 1,800 is the fair value of asset. Then you write here two liabilities. When here I am writing two liabilities, indirectly it means I am recording net assets. So net assets 900. Out of these net assets, some portion belongs to NCI. So when I write NCI towards the credit side, it reflects that out of net assets of 900, 1,800 minus 900, 360 belongs to NCI. So that means now out of net assets of 900, 360 belongs to NCI. That means I am left up with 540 worth of net assets. For that I am paying a consideration of, you can write to cash also, because it is given in the question that you are paying the consideration in cash. So you are paying 700. So that is why the difference will be equal to goodwill, which you have already computed 160. Is it clear to you or not? Yes, sir. Although the question has asked us to solve it by computing NCI on proportionate basis, still I would love you to let me know if I would have computed the NCI on fair value basis, what would have been the amount of goodwill. NCI on fair value basis. If I would have computed NCI on fair value basis, what would have been the value of NCI? It is clearly given in the question that for 60% amount paid, when we are acquiring 60% share capital of the acquiring company, we are paying 700 lakhs. We are paying 700 lakhs. If we had acquired 100% stakes, how much we would have had paid? That is 700 into 100 divided by 60. That will be equal to 1166.67 lakhs. This 1167 lakhs, what does it reflect? It reflects the fair value of 100% of the share capital. What does it reflect? First of all, you need to understand this. It reflects the fair value of the share capital of acquiring company. Fair value of 100% of share capital of acquiring. See, their book value might be equal to 1,000, but the fair value is equal to 1167. So it reflects the total value, total fair value of the total share capital of the acquiring. Now, out of 100%, you have got 70%. Sorry, you have got 60%. Value of 100% share capital of acquiring is this much, and you acquired 60% stakes, so that is why you paid equal to 700 lakhs. Now you have acquired 60%, remaining 40% must be having this much of value. if I will subtract 700 from this, I can compute this way around also, or I can simply take 40% of 1167. 1166.67, that will be equal to approximately 467 lakhs. Approximately, correct? So we may say that value of 40% share capital, fair value of 40% share capital which is held by other shareholder is equal to this much. We may say it this way around, isn't it or not? Yes, absolutely. So this is the fair value. Now I can compute the amount of goodwill. In order to compute the goodwill, what I will do, I will repeat the process. 100% of net identifiable assets of acquiree. 100% of NIFA of acquiree, of course, on the date of acquisition. I haven't written it this time, don't worry. So we know that their assets were worth 1,800, liabilities were worth 900. So 900 is the value. And now I am going to subtract NCI, because now I am measuring NCI at fair value, which we have just computed, that is equal to 467. So it will be now presumed that out of 900, 467 worth of assets belong to NCI. So whatever we are left up with now, 433, that reflects the share of acquirer, share of acquirer in net identifiable assets of the acquiree on the date of acquisition. Now you have paid for the same a consideration of 700 lakhs. You have paid a consideration of 700 lakhs. So whatever balance will be there now, that will be termed as goodwill. This will become your goodwill. Is it clear to you or not? However, you must remember it reflects group's goodwill. When NCI is measured at fair value, this goodwill which will be reflected in the CFS, it reflects the group's goodwill. Group means in this goodwill, some portion, that is 60% portion, actually relates to acquirer, and of course 40% relates to acquiree. While when we compute the NCI on proportionate basis, in that case whatever goodwill we are going to get and which would be reflected later on in the consolidated financial statement, in that case it reflects only the share of the acquirer. So these things you must not neglect, correct? Now we pick up question number 1.5. Question number 1.5. I am simply analyzing the question. You have the notes, you can look into that. I will simply explain it for you this way round. First I will stress the line. As usual. In this question, what is happening? There is a company by the name of M Limited. M Limited. And it is given in this question that on 1/1/23, this company is acquiring 80% stakes. 80% stakes. They are acquiring 80% stakes in P Limited. In P Limited on 1/1/2023. So we are presuming that accounting year must have started from 1/4/2022. When we reached on 1/1/2023, we made an investment. And accounting year must be ending on 31/3/2023. Correct? For 80% stakes, it is given we have decided to give a consideration in cash to the extent of 250 lakhs or whatever it is. Correct? On the date of control, P Limited is having identifiable assets worth rupees 350. It is given in the question. And they are having liabilities to the extent of 50. In this question, the most important thing which is given, if you will go through the question, that NCI, of course, we have got 80% stakes, so stakes of NCI must be equal to 20%. And it is given in the question that their fair value, that means you need not require to compute the fair value, it is given. Their fair value is equal to 43 lakhs or whatever it is. In this question, it is given. So, because in this question it is given, it can be implied that we have to compute NCI, or this company is willing or wishing to compute NCI on fair value basis. It is quite obviously correct. So fair value of NCI is given. That automatically leads us to the conclusion that entity is interested in computing the NCI on fair value basis. So now I will do the solution. Calculation of goodwill. In order to compute the goodwill, we are now quite deft in it. We have become a little bit of deft. Deft means expert in it. 100% of NIFA, and make a habit of writing NIFA of acquiry. It looks tiresome, but make a habit. On the date of acquisition. So on the date of acquisition, 350 minus 50. Assets were 350, liabilities were 50. So we may say NIFA is equal to 300 lakhs, correct? Out of this NIFA, now I am going to subtract NCI. This time fair value is given, we need not require to compute it. Fair value given. If I would have adopted proportionate method basis, I would have computed 20% of 300. But we have to compute NCI on fair value basis, and value is given, it is clearly given in the question that their fair value is equal to 43. So I'm going to subtract 43, I will be left off with 257. This 257 simply reflects what? It reflects share of acquirer. Share of acquirer in NIFA. Share of acquirer in NIFA, of course, on the date of acquisition is equal to 257. And now we are going to compare it with the amount which we are going to pay. We are paying a consideration of 250 lakhs or 250 crores, whatever you may presume it. So this time amount of consideration is less than the amount of net assets which we are getting. So we may say that in this case, there is gain on bargain purchase. If you remember, when I started the discussion in the very first session, I did talk about this particular fact that gain on bargain purchase, correct, is nothing but it is capital reserve, synonymous to capital reserve. However, now we are going to use the term gain on bargain purchase under Ind AS number 1. I talked about the fact that generally it is not possible for the acquirer to have such a situation. Gain on bargain purchase becomes possible only when the acquiring company is functioning or operating under some very restrictive conditions, under very constraining conditions, and out of compulsion they are selling out their business. So in that case, acquirer may have gain. So this time acquirer gain, no doubt about it. What will be my entry? Entry. Calculation of goodwill. Now we are passing the entry second. When you pass the entry, I told you it is always better to write the assets, or better write identifiable assets, because assets have been given separately. So first write assets account debit, then write two liabilities. By writing assets and liabilities separately, you have recorded net assets. Out of these net assets, some portion of the net assets relates to NCI, which is equal to 43. So we may say out of net assets of 343 relates to NCI. So far this entry reflects that net assets of 257, which is the share of what we call acquirer. And for 257, we are paying a consideration of. We can write 2 cash also, because it is given in the question that consideration is paid in cash. Now consideration is 250. So that is why this time there is a gain. And this gain will be recorded as 2 gain on bargain purchase, that is 7. Is it clear to you? Suppose if in this question, suppose NCI is measured at proportionate basis, then what would have been your answer? Measured on proportionate basis. If NCI would have been measured on proportionate basis, what would have been your answer? It is very simple. Very, very simple. Now it should be almost like a stroll in the park for you. 100% of NIFA, first of all, you are going to write. 100% of NIFA is equal to 300, which we have already recorded earlier. From here on, I am going to subtract share of NCI. Now we are computing NCI on proportionate basis. So I will take 20% because 80% is our stakes. 20% of net identifiable assets of 300. That means 60 worth of asset belongs to what we call NCI. 240 we are left off with. This reflects the share of acquirer. Now it reflects the share of acquirer, isn't it or not? It reflects the share of acquirer in the net identifiable assets of acquiree on the date of acquisition. Now we are making a payment of 250. Consideration is 250. So in this case, if I would have measured NCI on proportionate basis, in that case, our answer would have been goodwill. However, this goodwill reflects the share of, because on proportionate basis we have computed, it will reflect only the share of acquirer. Is it clear to you or not? You should be aware of all such things. After having done this question, now we pick up 1.6. Please have a look over the notes which you have been given. You look into your notes. I will explain the question, correct, as my habit is, because most of the question are memorized to me now. 1.6 is the next question which we are picking up. 1.6. In 1.6, what I am going to write, first of all, just pay attention. First, let me stretch a line, as I did in the last question. This is the line I have stressed. In this case also, accounting year, you will presume later on after going through the question, as starting from 1/4/2022, when you reach 1/1/23, acquirer company acquired 70% stakes, 70% stakes in acquiring company, and the name of acquiring company is Nainital Orchards Limited. Nainital Orchards Limited, correct? And the name of the acquirer is Hansa Limited. Hansa Limited acquired 70% stakes on this date. Presuming accounting year is ending on 31/3/2023. On this date, control has been acquired, as was the case in the last question. This is our date of acquisition. As per the agreement, the consideration which you are going to deliver will be equal to 700 lakhs. Consideration will be equal to 700 lakhs. On the date of control, similar to the last question, it is given. Similar to the last question, it is given that identifiable assets of Nainital Orchards Limited were to the extent of 1,500 lakhs and liabilities were worth rupees 600 lakhs. So if you have gone through this question, you must have noticed that there are two requirements. The first requirement of the question is when NCI is measured on fair value basis. When NCI is measured on fair value basis, what will be the solution? So 100% of fair value of NIFA, net identifiable assets of acquiring company Nainital Orchards Limited on the date of acquisition. Make a habit of writing this full-fledged, correct? It will, by writing, what happens? Some of you may say, sir, time gets wasted. No, that is not the case. By writing, you retain these things, correct? So, far deeply. So, in this case, rupees in lakhs. If I would ask you what will be the net amount of net identifiable assets, 1,500 minus 600, that will be equal to 900 lakhs. Now I subtract from here NCI. Now I am computing NCI on fair value basis. Fair value basis. So you can compute it straight away. For example, it is given that you have acquired 70% stakes. We are acquiring 70% stakes and we are paying 700 lakhs. That means the fair value of 70% is equal to 700 lakhs. That means fair value of share capital of the equity, because share capital of equity is being acquired. So fair value, this, what does it reflect? It reflects it is the fair value of 70% of the share capital of the equity. So a fair value of 70% is equal to this much, and NCI's stake is 30%. So what will be the fair value of 30%? So you can straight away compute 30 into 700 divided by 70. So straight away we can compute it. So it will reflect 300. So we may say that fair value of NCI's, correct, is equal to 300. From 900, if I subtract it, I will be left up with share of acquirer. Share of acquirer in net assets, correct, on the date of acquisition. That is 600. And we are making a payment of 700 lakhs. Consideration is equal to 700 lakhs. So I will write here 700 lakhs. 700 lakhs. Now balance reflects goodwill. Balance reflects goodwill. Correct? This balance is your goodwill. No doubt about that. Suppose if you are going to compute NCI, now this is second part of the question. When NCI is measured, I've already told you when NCI is measured, in that case, whatever amount of goodwill which we get, of course the amount of goodwill will be written later on in the consolidated financial statement. This reflects group's goodwill. What is group? Group is parent and subsidiary. Because Hansa has acquired 70% stake, so Hansa is the parent entity and no limited acquiring entity will be its subsidiary. So parent plus subsidiary makes group. So this is group's what we call goodwill. That means in this goodwill, some portion relates to Hansa Limited and some portion relates to acquiring. When NCI is measured, on proportionate basis, when NCI is measured on proportionate basis, in that case, what would be your answer? You need to give me the answer in this case of your own. I will write first of all 100% of NIFA of acquiring, of course on the date of control, on the date of acquisition or control, whatever you may like to write, 900. Out of 900, I will subtract NCI. Now because I am measuring NCI on proportionate basis, the proportion of NCI is 30% into 900. So 270 worth of net assets as per proportionate basis relates to NCI, we may say in this case, correct? Now, we are left up with 630. This 630 reflects share of acquirer. When I write share of acquirer, it means share of acquirer in net identifiable assets on the date of control. And for that, we are making a payment in the form of cash, 700 lakhs. 700 lakhs. So I will get goodwill again. This goodwill will also be represented in the consolidated financial statement. But this goodwill reflects share of acquirer only. Share of acquirer only. Is it clear to you or not? After finishing 1.6, after having finished 1.6, please pay attention. So next few questions are meant for you to do it by yourself, but 1.7 I am going to pick up first. 1.7, correct? In 1.7, what is given to you? C Limited acquired 60% share in D Limited for cash payment of rupees 2 lakh. Okay, I will keep this sheet here and I will analyze the question simultaneously. 1.7 is the next question. Where is the red pin? Red pin has fallen down. So 1.7. This is 1.7, correct? In 1.7, it is given C Limited acquires shares C Limited. This is C Limited. It acquired shares in D Limited. Control is 60%, correct? It is given further that we acquired 60% control, and for that we are making a payment of rupees 2 lakh by way of consideration. 2 lakh. Further, it is given fair value of non-controlling interest is 1 lakh. Very interestingly, 60% share are in our hand. So that means 40% shares are in the hands of the other shareholders. The other shareholders will be termed as NCI, and it is given in the question their fair value is equal to rupees 1 lakh. Further, it is given this amount was determined with reference to the market price. Of course, it happens. So on the date of acquisition, we have computed the fair value. Now the question says, compute the value of NCI and goodwill. Now part 1 of the question, this is part 1. Part 1 says, you compute the amount of goodwill if NCI is measured on fair value approach, correct? Fair value approach and proportionate share of identified net assets in acquiree approach if the aggregate value of these identifiable net assets is 2,40,000. The part 1, what does it mean? Part 1 says that if net identifiable assets of acquiree D Limited is equal to rupees 2,40,000. Now question is telling that presume first of all net identifiable assets of D Limited is equal to 2,40,000 and compute the amount of goodwill. If NCI is measured, first of all you understand what question is asking you to do. If NCI is measured at 1 or A, fair value, and B, proportionate method basis. This is the demand of the question. I hope now you got it. So if net identifiable assets of D Limited is equal to 240, in that case you have to compute the amount of goodwill, and you have to compute the amount of goodwill on the basis of NCI being measured at fair value and of course simultaneously on proportionate basis. So part 1, under it we will have first of all solution A, NCI on fair value basis. I will first of all write 100% of net identifiable asset. Net identifiable asset, 100% of net identifiable assets. First of all, I am going to pick it. And it is given that net identifiable asset is equal to 2,40,000. Less NCI, fair value. Actually, fair value is given in the question. Fair value of NCI is given in the question, that is equal to 1 lakh. It is given in the question. So NCI at fair value is 1 lakh. So that means remaining asset, remaining net asset basically relates to acquirer, share of acquirer, share of acquirer in net assets. How much consideration we are paying? It is given 2 lakh. So consideration is equal to 2 lakhs. Since amount of consideration exceeds, so in this case it will be goodwill and it will be known as group's goodwill. You need not require that, but you need to understand that this goodwill, which will be later on reflected in consolidated financials, reflects group's goodwill. Under part 1, if net identifiable assets are 2,40,000, but NCI is being measured at NCI on proportionate basis, in that case, what will happen? Proportionate basis. If we are going to measure NCI on proportionate basis, in this case, 100% of NIFA. 100% of NIFA is equal to 2,40,000 net identifiable assets, fair value of net identifiable assets. Correct? Now from there on, I am going to subtract NCI. Now I am measuring NCI on proportionate method basis. Our stakes are 60%, so stakes of NCI must be 40%. So 40% of rupees 2,40,000. That will be equal to 96,000. That will be equal to 96,000. Is it clear to you or not? I will be left up with now 1,44,000. This 1,44,000, what does it reflect? This reflects share of acquirer in NIFA, net identifiable assets of acquiree on the date of acquisition. Now I will compare it with the amount of consideration. Amount of consideration. How much consideration I am paying? It is given as 2 lakhs. So in this case, again, we will have 56,000 as goodwill. So 56,000 will be amount of goodwill. This will be goodwill. Correct? The part 2, what is part 2 of this question? Part 2 states that, part 2 of this question states that, part 2, presume NIFA, net identifiable assets. It is given in the question that you have to compute again amount of goodwill on the basis of what we call NCI being measured on fair value basis and proportionate basis, but this time net identifiable asset is equal to 3,30,000. So part 2 says that presume first of all now net identifiable asset is equal to 3,30,000, and then again question asks us to compute goodwill. Compute goodwill if NCI is measured at fair value and proportionate basis. Similar question. NCI on fair value basis and NCI on proportionate basis. This is the theme of the question. So similar to the last one, this part again you can say has two subparts. NCI on fair value basis. Again you will write 100% of fair value of net identifiable assets of acquiring. Now which is given to us this time 3,30,000. 3,30,000 becomes the fair value, correct? Now, from here, I am going to subtract NCI. NCI we are measuring at fair value. However, fair value is given in the question, that is 1 lakh. It is given in itself in the question. I need not require to find out the fair value. It is given in the question. 2 lakhs. This 2 lakh reflects share of acquirer. Share of acquirer in NIFA. Of course, of acquiree on the date of control. Consideration. What is the amount of consideration? Consideration amount in this case, consideration amount was how much? I have written here 2 lakh. Actually, it is 2,30,000. I am extremely sorry. What is the amount of consideration? Where is the sheet? Amount of consideration was given to us as rupees 2 lakh, right? So, in this case, we are getting share of net assets of 2,30,000 while payment is equal to 2 lakh. So 30,000 will be termed as gain on bargain purchase. Gain on bargain purchase. Correct? If NCI is measured on fair value basis and net identifiable assets are 330, in that case we are having a gain. However, NCI on proportionate basis. NCI on proportionate basis. 100% of fair value of NIFA. That is 3,30,000. Correct? Now you subtract NCI. You are having 60% control. So 40% is NCI share and 40% of 3,30,000 will be equal to 1,32,000 if I am not wrong. Correct? That will be 1,32,000 and balance will be share of acquirer. Share of acquirer will become how much? 198. Zero, 2, 3, 3. Yes, 1,98,000. Then consideration. Consideration in this case is equal to 2 lakhs. Consideration marginally is more than what we call net assets. So again there will be goodwill. 2,000. Because NCI is being measured on proportionate method basis, this goodwill reflects the share of acquirer only. So after having finished 1.7, you can do question number 1.8 of your own, correct? 1.9 is not there, 1.10 and 1.11, correct? So in the next session, we will start a very heavy topic, correct? Common control, demerger, spin-offs and sale of division that we are going to pick up in the next session. So be ready for the next session. However, this section which we have finished, I just want to test you actually how much you have learned out of this. Correct? Let me also see to it now. So, in order to check your progress, you will have to give me some answers. Okay? So, you are taking a test. You can presume it that way. Now, you let me know. Suppose I am going to ask you a very simple question. From this particular section, your progress report, correct? You let me know. Suppose if I give you a question like this, very tough question, Ind AS 103, and I give you some options A, B, C, D. Which option you are going to take if I am going to write one of the option as business combination and corporate restructuring, quite obviously, correct? Second question, Ind AS 103, Ind AS 103 provides guidelines and guidance with respect to books of acquiry, with respect to books of acquirer, with respect to books of NCI, and with respect to books of other shareholders. So which options you are going to here write? Acquirer. Remember one thing. Correct? Suppose if I say Ind AS 103 prescribes which method of accounting? Ind AS 103 prescribes which method of accounting? Out of various options which you may be given, you should mark that option where it would be written acquisition method accounting. Ind AS 3 we have seen actually prescribes acquisition method accounting, isn't it or not? Fourth, if NCI is measured on fair value basis, then goodwill in consolidated financial statement reflects. Your options are A, share of acquiry. Of course, this is wrong. It is written share of acquirer. Again, it will be wrong. Group, your answer should be yes. This will be your answer. Because when you are going to measure NCI on fair value basis, whatever goodwill appears in consolidated financial statement, it shows group's goodwill. However, if I will turn now this question this way around, if NCI is measured on proportionate basis, then goodwill which will appear in the balance sheet in the consolidated financial statement, it shows share of acquiry, wrong. It shows share of acquirer, yes. Correct? So, when you study sections, correct, your focus should also always be which sort of NCI could be framed out of that. So, that will give you a good visualization and that will help you later on whenever any MCQ gets tossed up in the examination. So, on such note, we finish up this particular session with the promise to meet you in the next one. And be present over there. So that is going to be a very, very heavy session, correct? So it's time to say a lovely, lovely good night from here in Delhi.